Hello, everyone. Hello, guys. How you guys doing today? Well, today's training, we're going to be discussing moving average, right? Now, before moving forward, let's discuss what is a moving average or MA. It's also known as a simple moving average, right? A moving average is a technical indicator that smooths out price trends by filtering out noise from random short-term price fluctuation, right? Um, to simplify that, guys, a moving average basically identify trends. It smooths out price trend. It's used to identify support and resistance in the market. Um, based on it is based on an EMA is based on the past price, the way it's calculated, right? And it's also known as a lagging indicator because it's based on the past price. The longer the period slash time frame, the longer the lag, right? And what I mean by that is, well, we'll review that in a short moment. There are three types of moving averages: simple, exponential, and weighted, right? Exponential and weighted is pretty similar, right? Similar. Um, it's kind of like I kind of put it in a nice way, like the outcast, right? Um, what is that? I'm sorry about that, guys. Okay. So there are three types of moving average. Once again, simple, exponential, and weighted, right? Now, today we're going to discuss the simple, right, which is our regular moving average, and we're also going to discuss the exponential moving average, right? Now, what is an or known as an EMA? Now, what is an EMA? Is another type of moving average, but it reacts faster to price than a simple moving average, right? There are but there, right? There are weighted. There are more weighted to recent period or less weighted to older period slash time frame. And once again, I'm going to explain what I mean by they're weighted more to recent period as well. So let's take a look on the charts. All right, so for this example, right, the blue line going to represent the simple moving average, and the orange line is going to represent the EMA. Okay, let's take a look. We are on the 1 hour time frame. This is Euro GBP. So let's take a look um, of what I mean. Right, so as I mentioned, EMA, which are represented by the blue lines, are weighted more to recent price, right? So what that means is that you will see the if you notice on the chart, you'll see that the orange line is below when we look at, for example, in a downtrend here, right? The orange line is below the blue line, which is a simple EMA, right? The simple MA, sorry. So as you can see, the orange line is closer to price action. And EMA reacts faster to price moving than the simple MA. Right? As you can see, the simple MA is above, which the simple MA is the blue line, which is above the orange line, which is the EMA. Okay. Now, even when we're looking at price reversal, you'll see that um, the simple MA react it delays in terms of switching directions, while the EMA, which is the orange line, already switched earlier and giving you properly price action, right? Not only that, once again, um, moving averages, as I mentioned before, best to um, are best to spot support and resistance in the market as well. And we're going to discuss that a little bit shortly. Just want you guys to have a clear understanding of the difference between the simple MA, sorry, and an EMA, right? Now, I mainly use EMAs because once again, more for scalper to intraday trader, and uh with EMAs you get that faster reaction to price, while a simple EMA it takes longer. But a simple EMA can be useful if you are a swing trader, right? Because it prevents you from getting those fake out moves in the market. Okay. Um, Now, in terms of EMAs, right? Once again, it is used to identify a trend. So if we look at this area right here, right? even though the overall market, guys, overall market is downtrending, right? We're just going to look at within this area and how EMAs can help you trade, right? Help you how as a trader you can use this towards your technical analysis to improve your wins, right? Your strategy. Okay, so let's take a look. So first, you know what? Let's use the EMA for this example and not the MA. Okay, let's take off that and use 50 EMA. Now, as we can see, guys, right? If we look in this market and we're looking at structure in this market, you could start to spot out support and resistance based on the EMA, right? As you can see, these are areas of support and resistance. Right here, sorry. Let me just use a black line right here. Areas of support and resistance in the market, right? These lows in the market, support and resistance, right? Again, we can look at this support and resistance. Sorry. All right. So if you notice the EMA, we can use it to advantage when we start looking at price breaking up. Like if we're looking for an uptrend, we can take advantage when we're looking at price breaking above, creating higher lows, and it's acting as a trampoline. Price is acting as a trampoline off this EMA line, right? And what you notice is that price dip a little lower, and as you can see, it's bouncing, waking off that EMA. And with that, you can help start identify the trend reversal, right? And um, using this EMA, using the EMA lines with your support and resistance is one of the most one of the greatest technical analysis in my opinion, because I use it a lot. I use the 50 EMA and 200 a lot. And as we can notice, when we look at this move here, if we're looking for a reversal, right? And as you can see, we have a crossover on the 50 and price react off our previous resistance, which now became a support. And with that, we're able to, with other things as well, we can use Fibonacci, but with that, we're able to take trade ideas, something like this, and trade in the market. Okay. Once again, you can see how price did the same thing over here. Price, this area was a previous resistance, right? Because price is beneath it. It broke through, right? So now it became a support, and it hit with your 50 EMA, right? And we can look at this trade here, and we're able to take setups like this, right? And make profit in the market. This is how you use an EMA, right? And once again, the EMA overall helps identify trend in the market. It's different, there's different types of EMA, different types of EMA. What I mean by that, different weighted types of EMA. What I mean by that, this is a 50 EMA. We have a 200 EMA. You can use a 20 EMA, whatever number you desire that based on your strategy. And with combination of different EMAs, you can look for entries in terms of crossovers, right? If a 20 EMA crossing over or 10 EMA crossing over to 50, you may look for potential entry. Now, as we can see over here as well, look how the EMA play as a perfect support and resistance. You see that price came under, right? Price retested the EMA right there. And at that area, you can see that price reacted beautifully and sold, right? Now, that is how you use EMAs in terms of support and resistance, right? We can see how price react off that EMA like a trampoline, right? Price hit it, reject, then you're able to take position. Same on the opposite side, price hit it over here, reject, and you're able to take positions. Price hit it, reject right here, and you're able to take positions, right? And we could keep looking at that. Look over here, these are beautiful, guys. Price break above, retest, you're able to take a position, broke above, retest, and look at that, support resistance lined up with structure, able to take entries and trade as well. All right, and we could keep doing that all day. All right, so that is how you use it. Identify support and resistance in the market. Now, how do you know if you're in an uptrend or a downtrend based on the EMA, right? Um, so once again, this is a 50 EMA. I like to use a 200 EMA to look at the trend properly, but for this training, we're just gonna stick to the 50. And basically, right, how to identify a trend if price is over, is price if price above EMA, looking for uptrend, right? And this is just a simplified version, guys. If price below EMA, looking for a downtrend. Now, am I saying to solely look at price being above or below? No, that is not what I'm saying, right? I'm just saying I'm only making that statement here, price is above or below. These are the type of trend to just simplify, right? So for example, we could look over here and we can see that was price came under that structure, right? We're not gonna enter just because price is under, but um we start seeing that price is retesting, creating support and resistance. Then we may look for position to take the trade down. Same here, price came here, right? It went up, hit off that EMA, came in below, give us a lower high, reject as well, breaking that low, right? You can look to take a position there and sell, right? Now, as you can see, um, as price as price is below the 50 EMA, right? Price is currently on that downtrend, right? And as price was above the 50 EMA, like this example over here, say that price was currently in uptrend. So that is how you help identify the trend. It keep it very simple. You're not paying attention. It keeps you in line when it comes to trading. You're not warning too much. Are we looking for buys or sell? It kind of help guide you, right? But also keep in mind price does lag. Not price, sorry, the indicator does lag. So you want to make sure that all the other your other technical skills are up to par with this, right? You're not just solely relying on the EMA. So what do I mean by that? Like if we go back to what is a trend line, right? Um, look at our support and resistance in the market, the structure, such as supply and demand, support and resistance. Um, looking at a fib level. So for example, with this combination here, maybe, I seen that price I seen that price dip below, came back within that structure, retest. I may want to combine that with a Fibonacci level and see what's going on there. See that price is at the 30%, which is a key reversal with my structure, and it's rejecting off that 50 EMA, right? And we got an engulfing candle. We're looking at candlesticks patterns as well. All these other factors that I'm going to play, and I'll look to take a position on this trade. Okay. Um, and another thing as well, even though that, the buy did work out there, you also want to keep in mind, what is the overall trend in the market? Are we downtrending, uptrending? What's going on? As we can see, we're downtrending over here. So if you're downtrending, you may not be looking for buy positions. That is, counter trend. You may just simply wait for, sell positions, as you can see. And look, as price, you know, come back below. Let's clear that up actually. Let's clear this up. Look over here, guys. As you can see, as price come back below this 200 EMA, and of our true trend line over here, we can see that price act as a trampoline of the 50 EMA, started selling, came back, retest, started selling, right? And we had a downtrend from there. Price did react off this area, started to push down a little bit, but then as we see that price start pushing back over that 50 EMA, are we entering because price is above the 50 EMA? No, we're trying to wait the thing is to wait for a retest, right? And as you can see, that retest is a common support and resistance level, right? If we drew this up across, look at that, right? And I could take this all the way back. You'll see how price react on this level, right? In the market. Let's adjust that a little bit better, right? So we can see that's a previous, area support and resistance. It came back there, meeting that 200 EMA. We have a candlestick pattern right here to look to enter off that. But any other fact, any other thing in terms of Fibonacci level, etc., right? 28 pips, and look to trade this up. And as you can see, price went nearly 50 pips. So, nearly 50 pips. So with that, that is how you will use the EMA line, right? Once again, you could use different you could use in terms of difference. So let's say, for example, let's switch to SMA, right? So for example, simple moving average is the same thing, right? As you can see, the difference, let me add that back for the EMA, right? EMA, let's add that back. Let's do 50 again. I want to guys show you the difference in terms of when it comes to trading. Let's make that orange again, make it look thick. You can see it, you don't need the labels on, right? Let's do that again, right? So look at the difference between the 50 EMA and the simple moving average, right? The regular MA versus the 50. As you can see, based on how price is weighted, the 50 EMA acts more of a trampoline, right? Versus the MA price kind of pushed up and, prices, not pushed up, the line kind of pushed up and price is below it, right? And it acts as a lag, right? Um, in terms of looking for entries to take the trade or buy or sell, right? We can see, simple examples of by the time price actually crossed the 50 and retest this area, which is the orange line for sell, it didn't really play that well with the simple, right? It's not much difference, right? It's just the simple is a little bit slower. In some cases, the simple does look good, like over here, right? But in my experience, right, just solely going off my opinion, right, figure out which, if you want to trade with EMAs or any type of moving average, right, figure out which one works best for you and your strategy, right? But in my experience, using the EMA works better than the simple moving average, right? But to each his own. Price, moves a little bit, faster and better, right? Not price move faster, the line move a little faster, so you're able to get in trades faster and better, right? Because keep in mind, EMA's lag, right? It's based on past, um, past price action, right? Um, so yeah, I wanted to show you guys this. So for example, let's stick with the SMA for now. All right, let's stick with the SMA. Yeah, let's stick with the SM, our basic simple moving average. Let's see if we can add another. Let's add a simple moving average, right? And we're gonna make that length, because this is 50. Let's make that length 20, right? For example, let's make it 10, right? Um, and we're gonna make that line orange, right? So this is it's two simple moving average, right? So basically we use it in conjunction. Let's actually make this moving average 20, right? Since that's 10. Right, so blues 20, amaze 10. Why is it not? Oh, which is visible. Sorry, it's off a little bit bigger. Right. So one of the best thing, guys, you can use is when price is crossing over. So the blue, it represent the 10. Blue represent the 10 moving average, the orange represent the 20. So this is how you can use a moving average and help you trade a little bit better. So as you can see, when price broke down below this the moving average and a retest, we now have the blue crossing over the orange, right? And together had to give you a good retest, act as a trampoline off this area, and this can be a good identifier of when to enter a trade. As you can see, price played out beautiful, right? Like here again, now we have the blue under the we have the blue under the 20, and as you can see, price retested that same area, right? And then it strengthened your analysis of entering this trade, 12 pips, and as you can see, price went for 40 pips, right? Look over here, even though, right, even though price went below both moving averages, because we know that the blue, which is the 10 moving average, is above now the 20 moving average, right? We can still um it should give you the idea that we're still in a bullish market, right? But the only time we're looking for a bearish move is when the blue crossed under the orange, right? So when the 10 goes under the orange, we can see that the market is bearish, but when the 10 is above the orange, right, which is the 20, we can see that the market is bullish. So even though price itself is below both EMAs, I'm both below both moving average, because the blue, which is the 10 moving average, is above the 20 moving average, we can still look for a bullish. In our head, we should all, you should be telling yourself that this is still a buy market unless you have um other analysis telling you otherwise, right? So as you can see, because of that, price was still um price still went bullish. We wouldn't have entered for a sell. And we see that price play out beautiful. Look at that. Now, whenever as once again, we see that price, the blue cross under the orange, we see that the market start to sell. We can look for areas of retest like here, right? And then entry, right? Now we see that price, the blue's now over the 20, right? The 10 is over the 20. So with that, that would tell us that we may be looking for some sort of reversal for uptrend now, or at least a pullback retest going to a certain level, right? We can back test this a little bit more. Right. Look at this. Beautiful, guys. Look at this. So price was under, the blue was under the orange, which is a 10 EMA, was under the 20 EMA, not EMA. It's just a habit, guys, because I trade with EMA so much, but this is the simple moving average. So the 10 moving average was under the 20 moving average, right? As you can see, price react this area and it sold for a little bit. But when price cross over, we're not in the, we're not in the trade yet. As you can see, as price retest and the blue is now above the orange, right? The 10 moving average is now above the 20 moving average. And you see how price act as a trampoline, right? It rejected. And now price act as a trampoline off the EMAs. I'm after act as a trampoline off of the moving averages, right? As you can see, you're able to take a trade like that based on a candlestick pattern and so forth, and trade to wherever you think the market is going. And we can see that happens a lot over in the market. Look at this. This is not really a good example. Whenever you see price is looking like this, it's sideways. The EMAs, that's usually a consolidation zone. So, you're not advanced when it comes to trading these type of zones. It's best to stay away, right? Look at this. Look how price plays beautiful. Blue's now over the orange, right? The 10 is now over the 25, right? 10 over the 20. Look, the blue's still over. The 10 is still over the 20, even though price is below, right? Came back up, buy, right? And we can see that happen over and over and over in the market, guys. So hope you guys got some value from this training video. Right? You can take screenshots of this, right? If you want to know what the EMA lines that I used, it was, once again, MA 20, which was orange, and MA 10, which is blue, right? You guys want to practice using these moving averages to look for trades, right? And please combine this with everything else I've been teaching you guys. Combine it with your using support and resistance. Still look at your basic trend line like here, right? It helps you, when to get into a better position trade, better trades, more pips, right? Use it with supply and demand, use it with Fibonacci's, use it with your candlestick entries, like look at the candlestick patterns. Do we have engulfing candles going on? Right, all this stuff. You can use it in terms of structure as well, how to enter trades, a break and retest, right? So yes, price rejected off the moving averages, but what areas should you enter at? Where should you put your stop loss? These things. So right, you can have better results. So thank you guys for for your time. If you have any questions, please schedule a one-to-one and we could dig a little bit deeper with more examples with moving averages and how to use it trade while trading for the best of your advantage, right? Thank you guys once again. Have a good day.